I'm going to talk about foreign exchange markets. We're focusing most of our risk taking in this sector right now, predicated on the belief that the US dollar is in the early stages of a secular bull market. In many ways, this is driven less by US policy and more by policy overseas, specifically in Europe, Japan, and China. So turning to Europe, on September the 4th, the ECB indicated an intention to radically increase the size of its balance sheet. And with this move, the ECB has confirmed, at least in our mind, that it is attempting to replicate Bank of Japan policy of the last couple of years and encourage the market to aggressively weaken its currency. Since mid-2012, the Bank of Japan has virtually doubled the size of its balance sheet and in the process driven the yen from just under 80 to the dollar to 108 now, a weakening of 40%. The euro is currently 10% off its highs of 2014. It's around 4% weaker since the ECB meeting on September the 4th. So the trend is very much in place. And we feel that the euro can weaken substantially against the dollar over the next couple of years. Perhaps not 40%, but certainly back towards parity. Turning to China, China comes into it in terms of the commodity currencies and commodity markets. So between 2002 and 2011, the commodity sector soared as the US dollar weakened. That inverse correlation is very strong, and we believe that dynamic is now in reverse. So commodity prices are falling as a result of both slower Chinese growth and a change in the profile of Chinese growth, a long-term shift away from commodity-intensive activity towards domestic consumption. So as a consequence of that and of ample supply in most commodity markets as a result of huge investment during the prior commodity boom, we feel the outlook for commodity prices is for them to continue to weaken. The correlation between commodity currencies, specifically the Aussie dollar, the Kiwi dollar, and the Canadian dollar with commodity prices is very strong. So we expect that they will extend their recent trend towards weakness, and the central banks of those currencies will welcome weaker currencies. So to sum up, we think that foreign exchange markets offer a lot of potential over the next couple of years.